Hey, how are you doing, Jennifer?
I'm good. How are you, Trudy?
Good. I'd like to introduce you to Jennifer. She is our representative from Equiton. And I'm Trudy Van Dyke from Real Page Team Realty. And I've invited Jennifer here to talk to us about what Equiton, who Equiton is, and what do you guys do?
Of course, of course. Well, just to introduce myself a little bit as well, too. So I'm Jennifer. I'm a senior associate on the private capital markets team at Equiton. And yes, I feel like that's a good place to dive into it. Who is Equiton and what do we do? Definitely a two-part question. So Equiton, we are a real estate investment company. And what do? We invest into real estate. How do we do that? Well, we raise capital from multiple individuals, people like myself, yourself, everyday people that might be looking for some real estate exposure.
Okay.
We take that capital and then we put it to work by investing into real estate and generating returns for investors. So in that sense, you can kind of call us a little bit of an asset manager as well, too, since we're managing a portfolio of assets.
And do you, like, the people that invest in this, like, is this like, do you need like massive amount of dollars, or like, is the everyday person? Like,
yeah, very good question. So honestly, the minimum investment starts at $25,000. We do have a few different investment solutions here. So yeah, you can start as little as $25,000 to kind of get started into it. And yeah, for the most part, like, a lot of our investors are everyday people like you and I. Some of my clients, it might be their first investment that they're ever making. Maybe they're a little bit earlier on, still in school sometimes. Sometimes a lot of my clients, they might be, very seasoned real estate investors who have a portfolio of properties themselves, and they might just be looking for something passive, maybe.
So some diversification.
Some diversification. Yeah, so it's really kind of broad range of people. Anyone can really invest into Equiton. And yeah, I think
that's kind of cool. So before we get too far into this, explain to me what really is passive real estate investing.
Yeah, that's a good place to start, because that's exactly what
I was going to say. Like, we need to go to like square one.
Yeah.
Like, start me here and then let's go here.
Yeah. We'll break it down. We'll peel back the layers and get into it.
Okay, good.
So really what passive real estate investing is, it's kind of like what it sounds like. It is a hands-off approach to investing into real estate. Right? Of course, you can go out, you can purchase your own property, you can manage that, become a landlord, if you will. Or another alternative to that would be to invest into a company that does it for you. It kind of takes the headache out of being a landlord.
So I don't have to go fix the toilet, is what you're telling me.
You don't have to fix a toilet.
At 3 o'clock in the morning.
You don't have to answer those tenant phone calls. You don't have to fix the pipes. Equiton's the one that will do that. We do our own property management as well, too. So really, it's what it sounds like. It's a hands-free investment into real estate.
Okay, so when you say passive, you truly mean passive.
Yes.
Okay.
If the investment that you're making, because we do, as I said, we have a few different solutions. And in terms of like the investment solutions that we offer, there's a range. We have 3 simple solutions, but they do differ in terms of the returns, the risk profile, and the investment strategy as well, too. So, whether maybe you're looking for a little bit more passive income or cash flow on a monthly basis, or maybe you're someone that's just looking for straight up growth. You don't really want that passive income. We do a bit of both. We have options for both ends.
So you could do like growth, but then you could like do, I get a check like every month or whatever, like income producing.
Exactly. Depending on the investment you're looking at. So yeah, that's kind of how you could go about it here. But yeah, it's hands off. It's completely passive, depending on the option that you would choose, like depending on what you're looking for. It's a set it and forget it strategy.
Nice.
Yeah.
I kind of appreciate that. So what is private equity investing?
Yeah. And that's a good question as well, too.
Because this is not like on the TSX or, like
you hit the nail on the
this
head.
is like a private thing. So what is it and how do I make this?
Yeah. Of course.
Safe, I guess, is probably what a lot of my people are going to be asking.
No, and that's a fair question, too. And a lot of people ask that on a day-to-day as well, because I think when you hear the term private equity, it kind of sounds a little bit mysterious, right?
Yeah.
You're like, who's investing into private equity?
Private.
What is this?
Yeah.
It's private. What does that even mean? So let's break that down. Number one, a private investment really is just an investment that doesn't trade on the public exchange, right? So of course, like you can, invest into the public markets, right? The TSX or whatnot. You can buy stocks, ETF funds. The thing is with the public markets, you have buyers and sellers on a day-to-day basis, right? So public markets, they do tend to be a little bit more volatile. Private investments, really what it is it's an investment that is not publicly traded. So typically you're investing directly with the company itself, like with Equiton, you're investing into our investments directly through Equiton.
Okay.
And it's not publicly traded. So the nice thing about private investments, I would say in general as a whole, is you typically experience more so stable and consistent returns. You're not opening up your account one day and seeing it go up like 50% and then next day down 20%. It doesn't really move in tandem with the public markets at all. So someone might want to consider diversifying their portfolio or a portion of it into the private investment space because it helps add a little bit more diversification to your overall investment portfolio, right? Of course, you can diversify into different industries, different companies on the public exchange, but if you're investing into both public investments and private investments, it's offering you another layer of diversification because now you have investments that aren't even moving in tandem with each other, right? So maybe those years that you might experience a little bit more of a down year in the public markets, your private investments still can be going stable and consistent in terms of the returns. It can help offset those bad years. Likewise, right, when you have a great year in the public markets, you still have your private investments that are providing that stable and consistent return.
So how is it doing this last year? Let's say the last 2 years. How has Equiton been doing?
Equiton's been doing very well the last 2 years. And honestly, that's a good place to start. Just giving a little bit of an introduction as well.
I was going to say.
Like, how long have we been around for?
Yeah.
So Equiton, we actually started out in 2015. So almost going on to 10 years of business now.
It's going to come up to the 10-year anniversary.
Yeah, 10-year anniversary mark. Since then, so we're proud to say that we are over $1 billion in assets under management.
That's a lot of money.
Yeah, so lots of money and lots of growth in the last 9 years. And really, as we've experienced growth, so when we started out, we did start out with, I would say, more of our flagship fund. It's called our apartment fund. But since then, as we've grown a little bit more, we've also dove a little bit more into the development space where we're actually constructing different buildings. And that's another investment option that we do offer for investors depending on what their investment goals might be. But yeah, over the past 9 years, the past 2 years, we have been, stable and consistent in terms of performance. Actually, it's kind of funny to say, if you look at our investments, they've actually never dipped in value.
Oh.
We have about 102 months of positive consecutive returns. And
nice.
That really just kind of speaks to, number one, I think the assets you're investing into. You're investing into real estate, right? You have a tangible asset backing your investment. And the value of your investment is directly linked to the value of the real estate that you're investing into in that portfolio. And then so really, I would say with sorry, I lost my train of thought.
That's okay. So my other question is, how does, I know you've got a couple of different streams to kind of invest in, but how do you guys determine what property gets to be a part of this little gift package?
Yeah, so that's a good question as well too. So pretty much at Equiton, we do everything in-house. We have our own property management team. They'll manage the properties on a day-to-day basis.
The day-to-day kind of the toilets backed up.
The toilets, all that stuff, all that headache stuff. Very important part of the Equiton team, though, would be our investments team, right? So they're the ones that are constantly looking at the markets. They're looking at new acquisition opportunities, going through the due diligence process. Actually, I know this, the due diligence process before we even acquire a building, it's actually quite detailed. Our investment team will go and do a full walkthrough of an apartment building, check out every single unit. So we are very meticulous in our due diligence process.
That's amazing.
Yeah. As you should be too, right?
If I'm putting money, if I'm putting 25 grand in, I want to know that you've seen every single.
Exactly.
Yeah.
Exactly.
You've looked in the corners.
Exactly. We're looking in the corners. We're lifting up the rugs. We're doing all the nitty gritty to make sure that it actually is a good acquisition opportunity to add to one of our portfolios. So that's really how we're going through it. I would say, the due diligence process, it could take months, right?
Mhm.
Like you could be thinking it's a great acquisition opportunity, then you get into the building and you're like, actually, this won't cut it for us.
This is not good for us.
It's done.
Yeah.
On to the next one. So our investment team, like that's really all they do. They're looking at the markets, they're looking at buildings, they're looking at maybe land development sites as well too, if we're looking at land to construct a new building upon. So that's kind of how we go about it. Yeah.
Okay. Well, that's like really cool. So, is there a difference between, I know we kind of sort of talked about it, but like between public and private real estate investment?
Yeah. And that's a good question too, because on the public exchange, you can definitely buy real estate.
Yeah, like there are some REITs on the public exchange.
There are some REITs on
So
the public exchange.
what makes you guys different?
Main difference is, number one, again, that the private investment, it is not publicly traded, right? So you're not going to experience that same volatility as you would with public REITs.
Mhm.
It's more so stable and consistent. And then with that being said too, like private investments, they are structured like, I recommend them for clients that are looking for more of a medium to long-term strategy.
Okay.
Because private investments, one thing to be mindful of is they are less liquid than the public markets. You
Okay.
could buy a public REIT out there and you could sell it off that same day, right? If you
Right.
could buy it, maybe an hour later, you're like, actually, I changed my mind. I'm going to sell it. Give me
I'm out.
Yeah,
Like
I'm
like
out.
it kind of went up and down, and I'm like a little bit nervous.
I'm a little bit scared. Private investments, though, typically what you'll see when you're looking around at different investments, there's usually like a minimum holding period or a minimum time frame,
Okay.
right? So you want to make sure that you're finding investment that does fit in with your own personal investment time frame. And the reason why private investments, I think it's important, like that they are more so less liquid, is because it helps maintain that true value of the assets,
Mhm.
right? You're not going to see that unit price moving up or down on a day-to-day basis.
So
Right?
do you guys have I think you guys have got 3 kind of pathways.
Yes.
Um,
Yes.
Is there a minimum investment time for each of those pathways?
Yes.
Okay.
Yes. So, I would say for the most part, like, because we do breaking down like the 2 styles of investments we have.
Mhm.
We have our private REITs.
Yep.
And we'll dive into what a private REIT is as well too. After, I think that's an important thing to cover.
I was going to say we do need to go
like,
there.
what does it
but
stand for?
yeah.
What's in it?
Yeah,
Like, how is it different than
yeah.
something else? But we've got our REITs, and then we also have land development investments.
Okay.
Right. So the way that REITs are structured, and with Equiton, so we have 2 different REITs. They have a soft holding period of 3 years.
Okay.
Right. So, and I say soft holding period because realistically, the liquidity is there if you need it. Like, it is more of a flexible investment option.
Mhm.
There's redemption penalties if you withdraw within the first 3 years.
Okay.
Right. So, and the reason why it's designed like that is because it's real estate. It takes time to put someone's money to work, right? And generate the returns off of it. So we kind of have that soft holding period there to encourage people to consider this more of a medium to long-term investment. And that's exactly what I advise my clients as well too. If you are looking for something a little bit more short-term, right, this might not be the investment strategy that you might want to go with, right? Like, these types of investments should definitely be more of like the medium to long-term.
And so what is a medium term versus long term?
Yeah, so I would say like, and this might be different for everyone. I say like medium term, I would say like 3 to 5 years.
Okay.
Long
So
term,
that's not very long.
yeah.
Yeah.
I guess you could, maybe some people consider a bit longer. I guess that's really how long term though, I would say like 10 plus years.
10 plus
right?
years. Okay.
So that's why I say kind of medium to long term. I would consider sub 3 years like more of like the short term, I guess.
Yeah.
Or-
Like, you're looking for immediate cash flow. You're
exactly.
like, so if you're looking for a cash flow investment, this is probably not the
not,
investment.
Not the cash flow aspect, just more so if you're looking to get your initial investment amount back within
In
3
like-
years.
Yeah. Like in
right?
under 3 years, then this is.
It's not something for you at this time.
Yeah.
Right?
But if
So-
you're looking, like, if you're like, oh yeah, in 3 to 5 years, this would actually be a good investment for me.
Exactly. And I think that's kind of a good segue into like the next topic. So what exactly is a REIT?
Yeah, please
what does
explain that to me.
What does it stand for? So REIT stands for Real Estate Investment Trust, REIT, you might see, right?
Okay.
And really what a REIT is it's a portfolio of multiple different real estate assets.
Okay.
Right? So it's a more diversified investment. You make one investment, you have access, exposure to a completely diversified portfolio. which is quite nice, right? Instead of maybe like building out your own portfolio, real estate portfolio, you do one investment and you have that diversification, which is amazing. So they're a fund. You're investing into a fund that holds multiple properties. And that's exactly what.
And what type of properties would be held in that REIT? Like for you guys specifically?
Yeah, so good question. Our flagship fund, our apartment fund, it's specifically apartment buildings and apartment building rentals, right? So Equiton will go out, we'll purchase apartment buildings that we see that we can add value into. Mm-hmm. We acquire them. We're the ones that rent out the units to our tenants. We do that tenant management. We collect those monthly rents. And really how we're, generating returns for investors, it's a combination of two things. Number one, it's that rental income that we collect.
Yep.
That's that cash flow aspect.
Okay.
Like the apartment fund, the way I like to describe it to people is it's mimicking your own investment property ownership. It's just on a more magnified scale because it's a portfolio of multiple apartment buildings instead of investing into maybe one unit, single family home or whatnot. It's more on a magnified scale.
So you get a stake in something.
Exactly.
Yeah.
You get a stake in all of those apartment buildings, of all of those rentals. And so when you think about it, when you go out and purchase your own investment property, how's your return being generated? Number one, it's the rental income that you're collecting on a monthly basis. Number two, the building likely might appreciate in value over time. Yep. It's the same thing with the apartment fund. The returns are generated from that rental income and then also the appreciation in the building values over time. That gets translated into the investor returns.
Perfect.
Yeah. And that cash flow aspect, so we pay out monthly distributions or we pay out distributions on a monthly basis, right? So that's kind of how you get that cash flow if that's what you're looking for.
Can you reinvest those monthly distributions? Like let's say you say, oh, you know what? At this point in time in my life, I really don't need the monthly income off of that. Could I reinvest that back into the portfolio?
Yes. And honestly, great question, because you can exactly do that.
Oh, really?
If you're looking for something like you just want to park your money somewhere, watch it grow, you're like, I actually don't need that passive income. I'm
not retiring for like another 10 years or something like that.
I'm good to go.
Yeah.
You can enroll, and this is what we'll call it. It's a distribution reinvestment plan, right?
Okay.
So then those distributions will automatically just be reinvested back into the fund each month, right? And now your returns are compounding on a monthly basis.
And returns. Is this only for the apartment fund or does this happen for all of them?
This would be for the REITs.
The REITs?
Yes.
Okay, specifically.
Yes,
okay.
For the REITs.
Okay. And then what are the other two?
Yes, so definitely a good option. So we've got our apartment fund.
We've got our apartment. We've got the REIT. We can reinvest our money back in every month until we actually need it on a monthly basis.
Yes.
And then option number two, door number two.
Door number two. So this is going to be on the complete flip side.
Okay.
So this type of investment is what we would call like a land development investment or a development project.
Okay.
And essentially what you're doing is you're investing into the construction of one particular property.
Oh.
Right? So you're kind of like, as an investor, you're the first one in, right? When you see like, pre-construction units being sold, some people think like they're the first ones in. Actually, no, like the development is the first
people in.
The first people in, the people investing
so
into the
before pre-construction.
Exactly.
Even. Oh.
Exactly.
Right.
And you're purchasing or you're attaining an equity stake in this development project. So the development investments, they're really just for growth. Like if you're looking for that high growth, that's what you'll get from a development investment. There's no passive income, right? So this would typically, when you're investing into a development, the way it's structured, it's more of like an in and out, right? You would do your initial investment of $25,000.
Yeah.
Once the project's fully completed, we've built it, we've sold off the units, people are starting to move in.
Yeah.
That's when we'll do a lump sum profit payout to our investors.
Oh, okay.
Right? With all the returns that have been generated.
Mm-hmm.
And so when you think about the land development process, right? It's really just Equiton will go out, we'll buy a parcel of land that we think that we can build a building upon.
Yep.
Usually you'll have to take it through, like you'll get the proper zoning, you'll get those site plan approvals, then you'll launch the pre-construction sales, and then usually you move into construction, and then eventually at the end, once those construction's complete, you have the occupancy point. People are starting to move into their new units, you give them the keys, the handover.
They're so excited.
Yeah, you're excited, it's that moment, I'm moving into my home, and then that's really when the investment is done, right? So our investors, we get the profits, investors are paid out, and then that's it for the investment, right? So it's more of like an in and out structure, whereas with the REITs, it's open ended. It can be as long as you'd like, right?
Or is short?
Or short.
So, of those like land development projects, like what's the time frame on those?
Yeah, so very good question. In general, like you can see a wide range, right? Like if you see a developer and they're building like a super high rise building, right?
Yeah.
You're probably going to see a longer time frame, right? Or if it's maybe like more of a community that you're building out that you're investing into, you'll see like sometimes I've seen development investments
like a multi-use kind of thing. Like you could have stores on the bottom and.
Yeah, not even that, but it's just like let's say if you like someone might be building like a community like of townhomes or whatnot, maybe cottage rentals. Like you could see different types of developments out there. So you could see them as long as 10 years, right? If it's a big project. With Equiton, typically what we're focusing on right now is mid-rise condo buildings, right? So maybe around like the 10 floor mark, 10 to 14 stories, let's say. If you're looking at a mid-rise condo building, let's say we bought the land or the land was purchased not fully zoned yet.
Yeah.
I would say on average, like you could probably see a time frame of like around 5 years, 5 to 6 years.
Okay. That's
right? To take it through the zoning process, you got to work with the cities a little bit back and forth. Construction, you might typically see it take around like 2 years. So I would say like roughly with the mid-rise condo buildings, and especially with Equiton, like about the 5-year point. Okay. So you put your money in, and then you get it paid out after the 5 years once it's completed.
Once it's done. And where the majority of these projects? So a lot of my people are from Ottawa and the Valley, but when I look at it, it's like a lot of, Horseshoe, Toronto, kind of that area. Is there? I don't know if is it important to be close to your investment, or like if I'm in Ottawa, why is it great for me to have something out in like to do an investment in Toronto or around the surrounding area?
Yeah, honestly, and good question. So to answer the first part, like if I'm investing into these markets, like the Toronto market, do I need to be right next to it? Answer is no, right? Because you don't actually have to lift a finger for the investment.
Because I'm not doing the toilets, right?
You're not doing the toilets. You're not building the building, right? So you actually don't need to be near it at all. Like Equiton, we're open to all Canadian investors, right? Okay. So we have investors from Northwest Territories, BC, Saskatchewan, Ontario, all over the place, really. So you definitely don't need to be next to it. Reason why you might want to consider the GTA area, I would say, and it's nice to do it too, is because of course you can purchase your own properties as well too, if you want that Ontario exposure or the GTA exposure, let's say. But it's nice if you do it through a passive investment because you don't actually it doesn't need to be in your backyard, right? And then you get exposure to a market that is so prominent, right? Like if you think about Canada, right, especially with immigration and people moving into Canada, you have 3 major cities, right, that you probably consider to move to, right? You've got Toronto, you've got Vancouver. You've got Montreal, right? And Toronto, really, people say it all the time. It's the city of opportunity, right? A lot of people like to move to Toronto. You have the job market there, a lot of job opportunities. So a lot of people do gravitate towards Toronto. And it's no secret, we do have such a shortage of housing in Canada.
We do. We
don't have enough supply for the amount of people.
A little bit of a shortage.
Yeah, a little bit.
Just a little bit.
Yeah, I know, exactly. So and realistically, like that supply shortage, it's definitely magnified in the GTA area, right? Okay. Because a lot of people do move there. And the interesting thing about Ontario is, yes, it's a big province, but you only have so much where you can build, right? You have the lake on one side. So now you see people like building upwards, right? Like that's why we have like so much high-rise, mid-rise condos like being built and whatnot. So I would say like really why you might want to consider the GTA market is because you can participate in like the booming market, honestly. Like you can participate in the appreciating prices, the rental market as well too, without actually, having to go there at all.
So should people be concerned, because we know the news headlines, right? It's like, condo market in Toronto is like, going down, blah, blah, blah. Like, should people be concerned about investing in the GTA?
That's a good question. Honestly, and it's funny because there is so many news.
I was gonna say everybody's got an opinion.
Everyone has opinion. Everyone's reading the news.
Yeah.
Everyone sees the headlines, and there's been some scary stuff that's been said.
I was gonna say
There's been some scary stuff.
Yeah.
But realistically, like, I wouldn't really be concerned, especially in the long term as well too. Like, especially this past year, it has been a bit of a tougher market with higher interest rates as well too. Higher interest rates makes it increasingly harder for people to actually purchase a home, right? Or purchase an investment property, right? It's gonna diminish your margins a little bit, right? So it gets a little bit harder to actually, attain real estate or whatnot. But realistically, when you think about the supply and demand, right? We're in the shelter business at the end of the day.
Yeah.
Everyone needs a place to live.
They need a roof over our heads.
Right? Like you have two basic necessities. You have food and you have
and
shelter.
shelter. Yeah. Maslow's hierarchy of needs.
Exactly. Everyone's remembering that.
Shelter, food, and then after that, we're good.
And when you think about, supply and demand, we don't have enough housing, but the demand is going to be there because everyone needs a place to live, right? And it's increasingly harder to purchase that starter home. So a lot of people, they are pushed more into you're forced to rent, right?
Yeah.
Like you've got to do something. You either buy or you rent. So I would say that supply shortage, it's going to persist for years, right?
Yeah, we're still way behind on what we need to be producing as far as not only in Ontario, but like
in Canada.
In Canada as a general, like we're way behind.
Yeah. So I would say, like, given that supply is, we don't have a supply shortage, but the demand is there.
Yeah.
I wouldn't really be worried in the long run. There's always going to be buyers in the market because of the demand that's there. And quite honestly, like, as the interest rates hopefully do start to even lower a little bit more than they already have. Exactly.
We're going to breathe in the next little bit.
Exactly. More people are going to be wanting to buy again, right? Or wanting to invest into real estate again. So honestly, in the long run, like, I'm not really too concerned about the real estate market in the GTA, to be honest. Like, I'm honestly not, because I'm thinking about the supply and demand.
And do you think, like, as a long-term investment, this is, like, GTA and surrounding areas a good long-term investment?
Absolutely. I would say absolutely. GTA area, you've got your Toronto right there. Like, I would definitely say it's a great long-term investment.
Oh, that's cool. So what does the investment process in Equiton look like?
Yeah, so that's a good question. Really, where it starts is just purely with education, right? So, I work with all different types of clients. People that are making their first investment, like I said, people that might be, very seasoned in the real estate space.
Yeah.
But at the end of the day, like, these types of investments, not everyone really knows about them, right? Like, it is a little bit...
like, I didn't know about them until, like, I'd say 6 to 8 months ago.
Exactly. You see private real estate, you're like, what is that? What's private real estate?
I was going to say, I didn't know. This is why I got the chance to reach out to you and chat, and we're like, wait.
Exactly. So really, like, it starts with education. So my first priority, of course, where it starts is just setting up a call. One-on-one call with myself, and it's to get to know each other a little bit, because realistically, I need to get to know you as a person. I want to know what your goals are. Like, why are you investing? Are you looking to build wealth? Are you looking for diversification? Are you, trying to build something for your family and whatnot in the future? Like, I really want to know, like, what the reason is that you're investing. And I want to know also, like, what are you currently invested in, right? Like, how are you diversified? What's your risk tolerance? What are your main goals? Because the more I know about you as an individual, right, I can help you assess, like, what investment might suit your needs a little bit more. So it starts with getting to know each other, number one. And then number two is the education part. Because at the end of the day, you need to know what you're investing into. Yes. I want all of my clients to do their due diligence. I want them to know exactly how the investment works through and through. Yeah. So education is a big part of that, right? Just doing a nice one-on-one walkthrough, talking to you about how the investment works. What buildings does Equiton even own? Like, let me show you them, right? Like, let me walk you through that. So really, it's a matter of discussing how you might want to structure your investment, right? Because the nice thing as well, too, about doing private real estate investing, yes, you can, just do a straight investment in your name. Yeah. But a lot of my clients are using registered accounts. Yes.
So that's a little interesting.
Yes, and we'll talk about that too. You can do retirement savings plan. You can use a tax-free savings account. Let's say you have like a locked-in retirement plan, maybe from an old employer too.
So like a lira.
A lira.
A lira,
Exactly.
okay.
A lira, right? Liras are big with private real estate because it's, in a long-term account that you can't really touch.
I was going to say, you can't touch until you
Right?
need to.
Exactly. So the liras and the RSPs, they do pair very nicely with private real estate, right? Because typically you're not diving into the RSP funds like on an annual basis, right? Like usually you're kind of doing that closer to retirement
Yep.
savings plan. So these types of investments do pair quite nicely with the registered accounts. And it's great too because let's say you do like managing your own properties, you love being a landlord, and you love real estate, right? You can get that same real estate exposure through those registered accounts. Why not utilize your tax-free savings account a little bit?
Yeah.
Do a real estate investment that's completely tax-free as well, right? So there's a lot of different options, and that's part of the discussion too. Like, what does your situation look like? Do you have registered accounts?
Yeah, because I've come from a very different background before I got into real estate, and I do have a lira, right? And then, I've looked at my returns over the last 10 years. I'm like, oh, that's nice, but I'd like a little bit more.
Yeah.
And what I've looked at as far as Equiton goes is there's a little bit more that I can actually probably tap into, and then have that growth happen. And I'm in my 50s, so my track is a little bit shorter than
You still got plenty of time.
I've got plenty of time, but still at the same time you kind of go, okay, but how long do I want to invest in that and then still be able to, so this seems like a good kind of midterm investment with still great returns. Now I know we talked about the apartment, the land development, but I think there's a third.
Yes.
Before we get any further, I was like, we need to talk about number 3.
You're right.
Investment.
That one actually did slip my mind a little bit, I will say. Third investment, it's also a REIT.
Okay.
And this one we call the Income and Development Fund. This one is a little bit of a hybrid of the two.
Oh.
It's got the income producing aspect that the apartment fund has. It has that cash flow aspect.
Yeah.
But you also do get exposure to developments as well too. It's just all bundled up nicely in a nice diversified portfolio. So you have about half income producing assets, right? Which could be typically it would be like a commercial property, right? And so we have our tenants paying us rent. You still get that monthly cash flow from that aspect. Yeah. But you also do get the growth from the developments, right? And
so I could take column A plus column B equals this little present.
Exactly. A nice little present. And we did it like that by design because we were like, hey, how do we because some people, they like developments, but maybe they don't have the risk appetite to invest into one standalone development offering, right? Maybe they still like the cash flow aspect, right? So the Income and Development Fund is a nice hybrid of the two that kind of, combines a little bit of the passive income, but then also the growth, right? So that's kind of the third one as well too. And across all of our investments, like Equiton in general, we target net annual returns of 8 to 20%.
Okay,
right? So
that's not bad.
Not
I think
bad.
that's better than the just general funds that were like mutual funds.
Yeah, honestly, depending on the ones that you're looking at, for sure. So it's nice. There's options out there for, I would say, from almost anyone.
Okay.
Yeah.
So we're almost at the end of our time.
Yes.
And I would love to continue this conversation another time. So hopefully you and I can do this again.
Oh yes, 100%.
Okay. We'll do part 2. So my quick question is, how does somebody get a hold of you?
Yes, good question. Good note to end it off on.
Yeah.
So really, if you would like to have a little bit more of a conversation about
one-to-one,
you want to get to know me a little bit, you want me to get to know you a little bit, you can reach me. My details will be on the screen, but you can reach me by email. You can reach me by my phone number as well too. Or third option, if you'd like to just kind of contact Trudy, have a little convo with Trudy. Trudy will definitely pass along your information to me as well.
Awesome. Thank you so much, Jennifer. And thank you guys for joining us tonight, or this afternoon. I'm not quite sure. As I look out the window, it could be afternoon or evening. Thank you so much. And we look forward to chatting with you guys again.
Yes, I'm
Thank
looking
you,
forward
Jennifer.
to it. Thank you, Trudy.
Okay.